afternoon. Welcome to FreightWaves Today. Julie, day 3. Are you excited?
We're doing it. I really am. We have a great show.
We have a great show. We've had amazing guests. We've had it's been absolutely incredible what we've been able to learn from these guests because they've offered so much about the current state of freight, the current state of the economy. Speaking of the economy, Julie, did you catch the ISM data?
I did. We did. We looked at it, and it is amazing. And the LMI data, too.
Yeah, I think we've got great reports. The ISM came in incredibly strong. It's the highest number since May of 2022. Manufacturing is in expansion. It's something we've been talking about for months. The fact that really since November of last year, freight markets are really, really pumping. And I think one of the things that's interesting about this is the ISM data came in really strong. That print is really positive. LMI, as we talked about yesterday, is also really, really strong.
Yeah.
And so, again, the freight data is confirming this. This is sort of following through. We've been talking about it. I do think one of the things I've learned the last couple of days is that consumer is also really strong.
It is. And so looking at the LMI as a whole is really interesting to see. And I know we're going to talk about it a little bit more in detail, and we've got a sonar update, too, that all of the upstream stuff is incredibly strong. Manufacturing, and then wholesale, and the retail is relatively strong, and then seeing
it's stronger than I think most people expected. I think with higher gas prices, higher inflationary things, one of the things that I thought was really important in these data points is just how wide this expansion is. It's not just AI data center, but you're seeing it across, I think, 16 of the 18 categories in terms of the survey data, across all of those different verticals. And it is certainly AI data centers are driving some of it. Yes. Energy is driving some of it. Defense manufacturing driving some of it. And some of the overall competitiveness in our factories, like the American industrial story is absolutely robust because of the plentiful amount of energy that we have in the United States. We heard from yesterday that John Kingston had said that the oil companies are expecting prices to go up. That will drive investment in domestic energy sources, which I think is a real positive for freight.
Yeah, I agree. I think you keep saying it. The industrial Rust Belt is back. The Midwest
We're back, baby.
Is the place.
This is good stuff. America is back. It feels great to be an American, to have all the pride that we have. And we're seeing it in freight data. And not to discount it at all, but did you catch tender rejections are a penny short of 17%. This is a cycle high. 16.99 at the O-Tri. The outbound tender rejection at the highest levels that we've seen since early 2022 at the start of the freight recession. There is no sign that capacity is loosening. And there's really no expectation that's going to happen. Well, Julie, let's get to our headlines. What is happening in the world of freight?
We kick things off with a major private equity play in the intermodal freight space. OpenRoad Ventures announced Tuesday that it has acquired Double Stack Logistics, an intermodal freight broker with direct relationships with the Class 1 railroads. Unlike many third-party logistics providers, Double Stack owns assets, a fleet of over 150 intermodal containers. According to founder and CEO Joe Kolb, the company specializes in taking items that typically don't ship intermodal and working with the railroads to shift that product from over-the-road to intermodal. Financial terms were not disclosed, but the backing will allow Double Stack to expand its service offering and North American footprint. This marks the first acquisition for middle-market firm OpenRoad Ventures, which is focused on acquiring small and mid-size freight brokers and has a series of additional acquisitions in the works. Over on the highways, drivers hauling fertilizer just got a massive break on hours of service rules. The Federal Motor Carrier Safety Administration put a waiver in place last week that runs from May 26 through August 26, allowing drivers in 34 states to transport fertilizer for 16 hours in a 24-hour period, a significant expansion from the standard 11 hours of driving in a 14-hour on-duty window. Citing a squeeze on fertilizer supplies and responding to a request from the Fertilizer Institute, FMCSA is waiving current hours of service regulations across states including Texas, California, Illinois, Iowa, and Nebraska, among many others. The driver is required to take a 6-hour break in the sleeper berth during those 24 hours, or an 8-hour break if the sleeper berth is not available. The waiver also eliminates the electronic logging device requirement, though drivers without an ELD must use paper logs. According to the Fertilizer Institute, farmers are well into spring planting, and the window to get fertilizer applied is small. Finally, a bitter legal battle is exposing alleged bad faith in the air cargo charter market. Miami-based Global Crossing Airlines has sued Ascent Global Logistics for $30 million in damages, alleging the former investment partner and largest shareholder reneged on an exclusive freight brokerage agreement to steer air cargo business its way. Instead, GlobalX claims Ascent assigned charter work to USA Jet Airlines, its expedited on-demand freighter subsidiary with a large roster of automotive clients. According to the complaint filed last month in Miami-Dade County Circuit Court, Ascent awarded hundreds of charters per month worth between $10 million to $15 million, but has only referred about $1 million in charter flights to GlobalX over the past 3 years. Between March 2023 and August 2024, Ascent only provided GlobalX with 24 expedited ad hoc cargo charters, while fulfilling about 400 expedited flights using its own airline during the same period. GlobalX earlier this year indefinitely parked 2 of its 4 Airbus A321 converted freighters because of severely limited demand. Ascent, in a statement, said it is no longer a shareholder of Global Crossing Airlines and believes the claims are without merit.
Julie, I don't think drivers could be happier than hearing that hours of service waivers and ELD waivers are out. This is all about fertilizer. Fertilizer has been under pressure since Hormuz. What is your take on this?
Okay, so I have a few takes on this.
Okay.
One, yes, and hours of service, it's amazing to have that lifted where they can do the 16 hours. When that used to happen in hurricanes and we were doing
they had the. I
emergency
remember when
supplies, that was amazing, and drivers loved it.
Would have the signs, FEMA, disaster relief.
Oh, it was the best.
A lot of them would just print them.
I mean, it wasn't great that there were hurricanes, but it was great that we felt
driver.
like we could move things a lot more
Correct.
quickly along
Yep.
and worry less about that. It does take a minute to make that adjustment, though,
In terms of
because
what?
you're not used to it. In terms of dispatching and planning
I
and
think for the big
understanding the hours of
carriers,
service.
I think the
smaller ones.
owner-operators
Yeah, I
and
agree.
drivers don't need any adjustment. Tell them there's no rules, or at least a change in the rules. They're fine. ELD devices have their own set of constraints that they have to contend with, that they've got to deal with it. But I imagine drivers are celebrating this. And this does feel, I mean, there's been a lot of this administration in terms of the SBA is giving loans to agriculture and supply chain companies. This was a headline a couple months ago where they're providing flexible financing to relieve some of the supply chain issues in agriculture. You know, this administration particularly has been always very sensitive to farmers.
Yes.
I think they understand the importance of farmers as the backbone. And logistics providers in farming and anyone in cold chain has gotten some benefits. Drivers love when there's no hours of service. What do you think it means for fertilizer industry?
Okay, so I thought this was an especially interesting story, so I pulled some stats on it this morning, talking about agriculture as a whole and why this fertilizer shortage is sort of such a big deal and why it's so important. So the cost of transport obviously is up for fertilizer, but the American Farm Bureau put out some statistics citing that 6 in 10 farmers reported worsening finances and 70% of farmers reported not being able to afford the amount of fertilizer they need. And it's kind of a perfect storm of why all of these things are happening. And it's about a lot of geopolitical disruption, right? So it started with Russia and Ukraine and the fact that, for example, Russia exports a huge amount of urea. A lot of the chemicals that go into fertilizer, the prices for that have doubled. And then the Strait of Hormuz, and then that continues to make transport. They all just sort of compound on each other to create this fertilizer shortage that's creating more and more pressure for farmers and for agriculture as a whole. So it made perfect sense when I was looking at the map to see where these hours of service regulations were lifted, that it's in Texas, California, the Midwest, the Southeast, highly agricultural parts of the country. But I think another part that wasn't covered in the headlines that's really interesting is that Texas has now also gone back to issuing CDLs for non-domiciled drivers and farm workers. So you can have a CDL if you're on a farm. So all of this is that's a whole issue and interesting on itself from the point of regulation, but all of this is incredibly interesting, in my opinion, when it comes to agriculture as a whole.
Yeah, I think there's so much focus on agriculture. Hormuz has been disruptive to, as you mentioned, to fertilizer supplies. And it's not just about the United States, it's about the global shortage that's being caused by that. We have plenty of natural gas in the United States. The problem is that the fertilizer issue specifically is a global phenomenon. It is it's quite challenging.
Yeah, I researched it a bit a couple of months ago as we were starting on SitReps, and we do have commodity data and lane shipping patterns in Sonar. So it was really interesting to see how those shipping patterns have changed from where they prior used to go. And it's showing fertilizer from like Spain to Egypt and different routes that generally they would be moving in like 79% down in some months. So certainly the shipping patterns and then length of time it takes for both those chemicals and the actual fertilizer to get to us or to anywhere else that they're being shipped internationally has gotten significantly longer.
Yeah, and if you want to see the SITREPS is a situation report inside of Sonar. For Sonar subscribers, it's long form research, you can get it. Next up, we have Tom Madine. You'll hear a word from our sponsor here right now.
It's National Safety Month, which makes this a great time to ask how your fleet can prevent more accidents. Samsara AI detects risks in real time, giving teams more visibility into what's happening on the road and more context to coach drivers before risky moments become incidents. Fleets using Samsara Complete AI Safety Solution have reduced crash rates by nearly 75%. See the data behind the results in the Samsara Safety Report at samsara.com/freightwaves. Welcome back. We, as Craig mentioned, have a great show lined up with a lot of really good guests, including our segment called The Feed. So please remember to post on X and tag hashtag FW Today. But up now is Tom Madine, the CEO of ShipStation, here with Craig.
Tom, you're the CEO of ShipStation is a new title for you.
Very
not
new.
a CEO. For those that are in freight or have been in freight for some time, they would know you as the CEO of Worldwide Express.
Correct.
You now have a new title. You're still in company.
New deal. No,
New deal.
they're a very different company, right? We put together, so we actually just closed on Monday a merger with Octane, they're a Thoma Bravo-backed company. They are a logistics software provider. The most well-known of their products is a product called ShipStation. But we closed the deal on Monday, and the go-forward name of the combined entity is ShipStation Global, so we're super pumped.
Well, congratulations on the deal. Congratulations on your role in running a much more expansive business.
Thank you.
Worldwide Express is a name that many people in our industry have known. You guys acquired Unishippers many years ago. Yep. Really focused on SMB has been the core thrust, although with your acquisition of Global Trans, it brought you into sort of mid-market for truckload. What does this business look like going forward?
So if you think about it, and again, I've been in this field for 29 years, and mainly working with SMBs and mid-market shippers. And as you think about what it's evolved into, SMBs, and really, I would say anything sub-enterprise, they're kind of cobbling together solutions, right? So they're going to use one system for their parcel, maybe something else for their LTL. Some of it may not be connected to their ERPs, and if they're selling through all these different channels that exist, right? E-commerce is becoming bigger in B2B. There's just not an easy way for someone to bring all of that together into one single pane of glass. What this gives us the ability to do, right, as you put the businesses together, we've got the ability to go into a business and provide them everything across modes from, parcel on up through, full truckload, all in a single pane of glass in a system where they can manage their inventory, manage all the different connections, whether it's to their own ERP, something homegrown, all these different selling channels that they have. And it creates sort of an asset for, if you think about it from the mind of an SMB shipper, where you can get everything in one, you get everything that you need in that one pane of glass. And by the way, with one person that when you need a throat to choke, whether it's a workflow software issue, a shipping issue, whatever it may be, you've got that one person to go to get it all taken care of. So I think it kind of changes the games in terms of how SMBs and mid-market companies can buy their freight.
What's great about it, I think, is you have not only do you have a single provider, but you have at some point we'll have seamless integration between other parties.
That's right.
So, I run a larger business, but I also have some small businesses that are in e-commerce, and the hardest part is getting all of the software and systems connected. And oftentimes, for small business owners, they don't have experience in logistics. They don't understand it.
They don't. And we found ourselves over the years as we were sort of contemplating, what do we do next? We would have to literally go out and find solutions on the market to sit between us and customers to create a solution, right? And this gives us now the ability, without having to have us or our customers cobble anything together, we can be that sort of one source of truth for everything and connect to, and again, if you think about ShipStation, part of what makes it such a unique tool is not only is it all the connections it has with, an array of carriers, but all the different systems that someone may be using, whether it's, NetSuite or Microsoft or Sales, like all of those connections are there. But it's funny, the first call I got as the ShipStation CEO from a customer is they were having problems. These things happen, big companies, balls get dropped, but it was like, someone was like, hey man, I've been trying to get this solved between and it's a pretty big healthcare shipper, right? Trying to get this problem solved between my Salesforce and ShipStation, and the integration broke, and I need to get it fixed. But that was like the first thing I got, the first like, I hate you CEO message that comes in, right? But we were able to get it addressed pretty quickly. The team's great. But it's all about the connectivity, right? So that people don't, anything you could do to eliminate manual processes is amazing. And then you think of the power of the tool to help people make better decisions, right? Like we think of it as a way that now, once everything's connected, now that we've got this great network of providers that we can bring in, we can help people ship more intelligently. So it's like if they want to, if they're thinking about whether it's, again, still some work to do, but we can tell them the right mode to ship. We can tell them, in many cases, the right carrier to use. But with the amount of data we're sitting on top of, and now the connectivity we have all across the board, we can just guide customers to making much better decisions about their shipping.
Now, what will the ShipStation customers that have been on the platform for many years, what will be the biggest impact to their business?
It'll take a little bit of time, but we're going to broaden the modal offering. So now if you're a ShipStation customer today, you're solely parcel. This summer, we'll be able to add LTL in, and then we're going to add other modes thereafter. But it broadens the modal offerings that they can now bring into ShipStation. And you're also going to have, keep in mind, part of what's made us such a unique asset in the space is we've got, across worldwide Unishippers and Global Trans, over 2,000 people out in the field working with customers. You're also going to have someone that can work directly with your account to also help you on the logistics side of the equation as well. So there's a lot of synergy between the two brands there, where it's like, hey, you've got this amazing workflow software, but oh, by the way, to the extent that we can help you in other ways, right, and give you some other options and choices to benefit from. That's where they're going to see the upside. Broader modal offerings and probably an ability to consume shipping from our network of carriers.
So when I think about alternatives without ShipStation now as this business, is the concept that you have all of these disparate parties that if I really wanted to have the best of the best, I would have to go find a really solid LTL relationship or a couple LTL relationships, maybe one or two major parcel carriers. If I occasionally had a truckload, I'd have to go find that. And then I have software in ERP and Shopify, and it just seems like a lot's going on. And for small businesses, these are not logistics experts like you and I are. And most of, a lot of our audience are logistics experts. They just don't have that time to actually devote to learning the business.
And you kind of hit the nail on the head. Part of our model, because we've spent more time in the SMB than anyone, and SMBs, they have different needs. A lot of companies think, well, SMB shippers are just like enterprise shippers, they just don't ship as much. And that's not factually true, right? Their needs may be, but they don't have a logistics expert. They don't have a software expert. They don't have a lot of them don't have an in-house, CIO who can actually help them with all their infrastructure. So it's an owner, or maybe they bring in a family member. They're smaller businesses. They can't be experts at everything. So they need not only the same, yes, they need shipping, right? And yes, they need the software, but they need people who can help them utilize it. They need people who can help make it easy for them. And that's always been the key to our model. Our whole model is about making things easy for SMBs. We make it easy for them to switch. We make it easy for them to get set up. We make it easy for them to resolve problems. So now you add in this element where we're going to be providing that to these literally millions of customers globally that rely on Octane products for their shipping. My view, it dramatically simplifies the way SMBs have to think about their logistics.
Yeah, SMB, small businesses, the owner is more involved than maybe at times they want to
Totally.
be. They have to be, because that is the lifeblood. That is the delivery is how customers experience e-commerce.
That's right.
It's not the online portals are pretty efficient. You can run a Shopify instant, and it's really easy and turnkey. But the experience is actually driven by the delivery experience, the post-sale experience, not necessarily by the online experience, which tends to be pretty ubiquitous.
Well, and that's where guidance from someone who understands the industry to actually help you as an owner make decisions, but also the tool itself. I give the team at Octane a ton of credit. We've embedded AI into the tool to help with intelligent decision making, and more than just making the decision, making the whole process easier for the owner or whomever we may be working with the merchant. There's also the whole element of like in shipping, and you know this, anyone who's been in freight and shipping long enough knows this, if you ship enough, you're gonna have problems. Where the problem really is exacerbated is when there's a delivery issue, whether it's a porch pirate or a misroute, whatever it may be. You go to any of our offices around the country and written on the wall is make it right. So a part of our culture, and this is what people love, is that in addition to this great software that's going to help you make intelligent decisions and this array of different choices to choose from, when something goes wrong, our people are there to help them navigate through it. And I think that's ultimately, to have success in the SMB, you have to be close to them. You have to give them something that's easy. You have to give them something that does simplify their lives, but you also need to be there that when it breaks, they're not left on their own calling an 800 number and talking to someone that, is totally unfamiliar with their account, right? Like you can do a lot through AI and automation, and we're at the front end of that, but there are still things for an SMB. They want to know that there's a human being on the other side who actually cares, and they are that throat to choke.
Tom, we look at our traffic on our website, and a large percent, actually the majority of the traffic that we get on FreightWaves.com and through our channels are actually people that have no logistics experience. These are basically your customer type, your typical core ICP are SMB owners or people that work in manufacturing that all of a sudden have an issue. They're trying to understand, why is the Postal Service having problems? What is the politics behind this problem? Why is Hormuz important to me? What happens with tariffs? These are folks that actually don't understand a lot of the intricacies that folks that live and breathe this stuff every day. I imagine in the role that your sales folks play is it's not just calling for orders, but it's really being consultative sales folks.
Totally.
Because they are the experts. They're the person that business owner can call when they have a problem.
Totally, and because how do you stand out in a business that could easily be commoditized? And it's the experience, right? So some of it is the experience of how do you interface with us? How easy do we make it for you? But when there is a problem, what do we do to make it right? Like, do we keep it as your headache, or do we make your headache our headache and fix it? And we're not perfect, but I think we do a better job than most of holding the customer's hands when it needs to be held. Educating them, because you're right, they don't actually know what's going, like they're not supposed to. They're running their business, right? These are entrepreneurs. It's like they're the most dynamic people on the planet, but they're not experts in shipping and logistics. That's our job.
Logistics is hard.
It's really hard
because it's a hard, brutal, unforgivable business that requires 100% on time, and we know that that's perfection. It's a thankless business too. I think Jet McCandless.
But Craig, I'm a software CEO now. I get to be much cooler.
You've
I've
get to
evolved.
name drop when
That's right.
My wife told me before COVID, like, hey, let's tone down the freight conversations at dinners because no one's impressed.
Exactly.
Now what's fun about it is I get to have those conversations and people are actually genuinely getting interested, whereas before but you software's far cool.
Well, you're a media guy.
I'm a media guy. I get to drop.
You're in a data
media.
business.
Yeah, for sure. With all the stuff that's happening around the world, what is the number one thing that small business owners are concerned about?
I think most small business owners who are pretty active are probably more worried about their own business, right, than they are about anything secular.
Are they even aware? There seems to be like a disconnect at times. We're so in the news, and I'm so ubiquitous on X that I feel like I'm having these conversations that the world isn't having. And then all of a sudden when something happens, they're surprised. But I remember years ago, I was building a house and my architect, this was during the supply chain crisis in 21, during middle COVID, we couldn't get all sorts of stuff as anyone who was building anything in those days. And I remember my architect, I was telling him, yeah, this is happening. Because nobody's talking about this. I'm like, what do you mean nobody's talking about it? That's all we talk about. But I realized that I live in a very specific side of the world. SMB owners aren't thinking about that.
Well, they can't. Look, if you're if you're a business owner, your focus rightly should be on building your business, right? And not that it's a luxury to understand all the drivers, but they're going to be more in most cases, the success of their business has a lot more to do with their execution on their business than anything else, right? And that's why we love working with them. But when it comes to take what's going on in the freight world right now with capacity being tight and pricing going up and oil, it takes some time to explain to people why are prices suddenly rising, right? Well, they don't traffic in our world, right? So for us, it's kind of like, well, no kidding. It takes some time to sort of educate them. I think if there's anything people, look, as I think about the world that we live in and the freight world, look, I think if you're an SMB and you did think outside of your own four walls and what are you concerned about? Look, I think people realistically are, and in your lead-in, the economy is doing incredibly well, but I'm worried about the price of gasoline, right? Usually, I've been in this long enough, anytime oil prices stay high for very long, it usually puts a crimp on demand. That doesn't seem to be the case right now. But I think that would be the only thing is like, hey, can we get through this, and we've got this great environment in freight because capacity is finally tightened and we're finally getting some of the bad actors out and all of this is all generally good, but will demand stay robust enough through the next 9 to 12 months without getting too hot, where it actually becomes a sustained recovery for the freight market, but it also allows the economy to get its footing and start to really grow and move in the right direction.
You have a lot of data. How big is the organization now?
So we move, collectively, we move close to 3 billion orders through our software.
That is
so
massive.
It's a big organization.
Couple $100 billion in terms of total GMV?
GMV is just north of 200 billion of GMV that moves through the platform.
That is a significant portion of the economy, particularly the e-commerce world. I mean, it's not a small business at all. What is your read on the consumer right now?
It's interesting. So when we look back at, if you use as a comparison what was going on in COVID, well, they're not as, we were both locked in your house with free, I still
buying stuff we regret, we'll say.
I know, I still have 3 cases of sriracha sauce in my house.
I have 40 boxes of rice to tell you how bad things got.
Did you panic shop too?
Because we covered this, we covered it so early. We had a case of meat and we covered it so early. It was February, my wife was pregnant and I made her go to, when Bed Bath & Beyond was in business, we went and bought all this stuff. She thought I was nuts. She's like, why are we buying all this stuff? She's like, you're making this up. And of course, some people would still argue I was making it up. But we had everything. We had masks. We were fully loaded because I would not let my wife do it. Now, the nice part was we had diapers. Because we had wipes, because we had a baby that was born in the middle of COVID. So I was a hero that moment in time, but I really get to play that role.
I bought I know this isn't what we're supposed to talk about. I bought 5, all the Tylenol in the stores because that was supposed to be what you took if you got COVID. And then the first night, all this food. And then the first night, we're all home huddled up it's like a zombie apocalypse. And we're like, oh, hey, Uber Eats is still open. Should we just order it? So it's just a disaster.
Yeah.
But anyway, so if you compare back to then, no, people aren't buying as much. But we look at the data year on year, people are strong.
We've heard that from the last couple of days. The guests have consistently said that they have been surprised. We heard it from Port of LA director, Gene Soroka. We heard it from Web Estes, that really consumer activity, JB Hunt was constructive. We've talked about manufacturing and industrials coming back. They look really, really strong. Upstream data is really strong. That's what these reports say. But it's exciting to hear the consumer hasn't been sapped.
Yeah, I mean, when we look across, take the 3 big modes we're in. Obviously, truckload, like everyone else, we're a reflection of the market. That's a good time to be in truck brokerage. LTL is doing incredibly well. There's some question in my head whether it's modal shift or demand generation, but it's doing really well. And then even parcel, which is kind of isolated, right? But we have a view of parcel across a broad spectrum of the market. It's holding firm.
It's interesting. Cass is a partner of FreightWaves. They publish the Cass shipment report.
Yep.
There's more LTL. This is something that is poorly understood. There's more LTL in that index in terms of shipment volume than truckload. And what's interesting about it is that as the economy recovers, companies go to bigger shipment sizes, which is why that shipping index drops in terms of numbers, but you can have more truckload expansion. And that does feel like we have this expansion. You're seeing it in the ISM data. You're seeing it in truckload. It does feel like we are, and what's nice about this particular part of the economy, I think, is that this is not stimulus driven. No. There is some incentives, some tax incentives. Obviously, AI data centers are helping. Energy, you live right in the heart of energy, living as a Texas resident. How great is Texas doing right now?
It's the greatest state on the planet. Not by the way, we do business in all the states, so I love all the states.
Texans always say that.
I love all the states.
Would you give a T for
Dude, come
Texas
on,
or a
don't
T
mess
for
with
Tennessee?
Texas, baby. You gotta-
So when I went to Baylor, I would always get into arguments with the Texans because they're like, and I was like, look, we'll remind you, we had to bail you out of the Alamo.
Yeah. Now, in fairness, I'm from New York, right? So I've adopted Texas, but home is where your heart is. I love Texas. But no, the economy is great in Texas. We've been insulated from. Anytime you have a place where more people are moving into than are moving out of, right? Generally, you're going to have a pretty rocking environment.
We could get into this conversation. I got to ask about the Mavs at some point. We'll ask it off camera, but that's a big story.
That's better off camera. I don't want to piss a lot of people off.
Your company headquarters are going to be in Dallas. You guys have a huge presence in Austin.
We are.
The management team, Joel Klum, friend of the show. He's still serving as COO.
Yeah, he's CEO. So it's sort of a best of both worlds. My direct reports are half our legacy Worldwide and half our legacy Octane. They had a phenomenal team over there, right? Their engineering, product, market. Those are capabilities that they are just top notch at, right? But you combine the two, right? You combine our commercial engine, you combine sort of the carrier relationships. It's a really complete organization.
Tom, I got to ask before we go. Last question: what is the future for ShipStation? Is an IPO on the horizon? Tom Bravo is a very successful private equity shop. Loves to buy successful businesses and then take them public. Is that the plan?
Right now our focus is on getting the two companies integrated and proving out the thesis that this really is going to be the go-to platform for businesses, not just e-commerce businesses, but for businesses to use for their shipping. And then I think the options are, there are a lot of them. IPO is certainly one of them. But right now, and this isn't just like corp talk. And the reality is, our focus on get the companies integrated, get the revenue trajectory moving in the right direction, get customers embracing the product set, and then we got a whole lot of options in front of us.
Tom, I got to come visit you in Dallas.
You do. I can visit you in Chattanooga, man.
Thanks for coming in.
Dude, I wouldn't miss it. You've got a great studio. I love this concept. I'd never been to Chattanooga, so when you invited me, I was like, you know what? I'm going to come do it live.
You picked a great day, by the way. The weather hasn't been great, but it is an amazing day.
Dude, Chattanooga's a great city.
We could spend another hour talking about all sorts of stuff. We got a lot to catch up on. We got to do a Dallas tour. I told Aaron Graff yesterday at Triumph.
Yep.
I got to come visit. He can't invite me back to his last two times I've gone and done their all hands. The market tanked. It was 19.
Stay away.
Stay away. It was also 22. Well, let's take a break.
Cool. Thanks, Craig.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited, and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
All right, welcome back. That was a great interview with Tom and Craig. I loved how he said, make it right. Customers don't always remember when you do things perfectly. They usually remember when you mess up, but what they always remember is when you have an exception and work really well with them to make it right. So that was great. Now we're going to do a dive into the Sonar data and hear what Craig has to say.
Some fantastic economic data showing that the reindustrialization, the industrialization surge is underway. ISM PMI's data, which is the Purchasing Managers Index, sort of the default index that everyone looks at historically to understand what's happening around manufacturing, reported its highest print since May of 2022 at 54. It's a diffusion index. Anything above 50 shows expansion. Anything below 50 shows contraction. So we're seeing incredibly high signs as it relates to manufacturing expansion. This is confirmation of what we've been talking about since November, is that the freight market, particularly in the industrial sector, is doing exceptionally well as we're coming out of this manufacturing slump and recession that we've been in really since the end of COVID. The other data point that we got yesterday is the LMI index. This is the Logistics Managers Index, and this is a survey of logistics managers across supply chain done by 4 universities, interviewing over 400 of those executives, and really asking questions on a number of data points. What are they seeing in inventory levels? What are they seeing in warehousing? What are they seeing in transportation cost, et cetera, et cetera, et cetera. This report is really important because it's an important barometer for transportation markets specifically. But what I think is interesting is it's confirming what we've been talking about, is that this particular freight market, this expansionary cycle in freight, is coming from the industrial sector. It's coming from manufacturing, what they would call upstream. We're seeing that in the data. So the upstream parts of the economy, parts when you're talking about industrial expansion, when you're talking about productivity in terms of the upper part of the cycle, not retail consumption. So retailers are really downstream. They're sort of at the end of the line, if you will. Upstream is manufacturing, it's the industrial segments. That's the stuff that's showing incredible promise. And so what we're seeing here is that industrial activity is expanding. Retailers are really cautious on taking on a lot of inventory. Part of it's tariff related, just not wanting to get stuck with a lot of inventory that they can't liquidate. They're also concerned about consumer sentiment. So they're just really operating incredibly cautious right now. And that's showing up in the data. The one thing that's also I'd like to flag is that inflationary concerns, particularly in inventory inflation as well as wholesale goods inflation, is up substantially, but it's not slowing down activity. Now, a lot of that inflation is likely related to the very things that's driving it. Oil and energy is one element, but there's also the demand cycle. So we're seeing higher energy prices, at least related to oil. And guess what? There's actually pull-through in terms of industrial activity in the energy segment. So that actually is not a bad thing. Inflation, when it's driven by demand level inflation, is actually not a horrible outcome. You kind of expect it. Supply and demand, you have higher demand, prices go up. Naturally, it's pulling through in the data. I think that's really promising. The other thing that's interesting is because demand is really strong, is that it's showing that companies are not losing volume, yet increasing prices. So I think that's also a sign of a industrial recovery. We've been talking about the industrial recovery for some time. The fact that we are seeing it, particularly in the old Rust Belt along I-35 all the way down to Texas, is that freight demand is incredibly robust. It's very strong. And this is the backstop of really tight capacity. In fact, We look at tender rejections, which is really the benchmark index of freight capacity that comes in every single day. We update it every single day. We're at 16.99% on the outbound tender rejection index. This is a penny shy of 17%. It's all new cycle high. And what is really, I think, incredible about this is that we all knew road check week was going to create some disruptions of capacity tightness. Memorial Day weekend, that whole week running up into a holiday is always tight. You always see it in the data. But what's interesting is the actual tightness has accelerated into June. Now, June is the busiest month of the year. This is the one month where you have so many demand inputs, whether we're talking construction, auto retooling, getting ready for next year's brands, next year's dated vehicles is part of it. You get produce moving, you get gardening, you get just construction. All this stuff that's happening is happening in June, and that's exactly what we're seeing in beverages, et cetera. So I would say this is an incredibly bullish set of reports. This is outside the freight data, and the freight data is confirming it. So we got ISM, we have LMI, we have the freight data. Things are rocking. Flatbeds continue to be incredibly tight. We've hit all-time high records on van and flatbed. Rejection levels are tight. There's just really a lot of reasons to think this trucking super cycle is going to continue. Nothing looks like it's going to slow down. We've heard on FreightWaves Today this week that even retail, I think one of the biggest concerns has been what's happening with the consumer. Consumer sentiment is incredibly low. But when you look at the data, you look at the retail consumption dollars, the freight data, and you hear from channel checks, and we got the opportunity to hear from Estes, we got the opportunity to hear from the Port of LA director earlier this week, they're not seeing softness, even in retail and consumer goods. So I think this is a really strong recovery. And the last thing I'd like to point out is this particular recovery that's taking place in freight markets is not driven by short-term stimulus. It's not driven by the PPP programs during COVID that we saw. That's really what drove the freight market, was this massive amount of government stimulus coming into the economy that drove a lot of demand. This recovery is wide, the breadth. If you look at the report, the LMI report, that we're seeing it in really all sectors. If you look at the ISM report, seeing it is very broad. These sets of reports are telling us that this recovery, this industrial expansion, this tightness in capacity, this accelerating freight demand is fundamental. It's driven by the private sector and not by government stimulus. I think that's why it's far more sustainable and why we should all be incredibly bullish as we go into the second half.
Thank you for that update. It was great. I love the LMI. I look forward to it coming out every month. I reference it in the Sonar Executive Dashboard all the time. Took a screenshot for myself today because it's something that's one of my favorites to look at. So if you had one key takeaway from all of that, what would it be for the audience?
Look, I think everyone is trying to figure out, is this economy about to roll over? There are folks that are on the bearish side that keep looking for reasons of why we should be bearish. I am certainly not one of them. I've been bullish since November in terms of economic activity. We've talked about capacity being tight. Everybody knows that this is really a supply-driven environment, lack of trucks. But also, I think the thing that is encouraging, and we just heard it from Tom, is that demand is actually robust, despite all of the noise. I mean, the University of Michigan consumer sentiment is at the lowest it's been. And so, but it doesn't seem to be affecting consumer purchasing. And it doesn't, like the industrial market is incredibly strong. Yes, AI data centers, construction is a part of it. It's a big CapEx boom. Yes, energy production. We heard from Tom again about the state of Texas and what they're seeing out in that market is strong. Defense is strong, but industrial competitiveness and all of that will flow through eventually to the consumer, and consumers are doing okay. Maybe they're seeing some pressure, but not to the degree that they're slowing down.
I think the rest of the month, certainly we talk about June is always busy for shipping. So I think the demand will remain, strong and supply will remain tight.
But when you're at 17% rejection rates, 16.99, gosh, we wish we could have gotten over maybe for tomorrow. That just tells you how robust this freight market is. And what's amazing about it, and I've talked about it so many times, everyone thought road check week was going to be the peak of tightness. Not the case. We've gotten tighter and tighter and tighter since road check Memorial Day, and now we're at almost 17%.
And that will continue, in my opinion, through the rest of the month. We're at end of month, we're at end of quarter. By the end of this month, we'll see what July holds. I think Amazon Prime Day will be really telling on consumer spending potentially, and that happens later this month. And so lots of good stuff to come.
And consumers got to drink their beverages. Beverages is always a huge piece of freight.
All right, we're going to take a quick break, but when we get back, we will have Dennis Montz, President and Chief Operating Officer of PayCargo Labs.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
The map is changing. As global uncertainties rise, the future of the supply chain is moving closer to home. Welcome to the new coast-to-coast North American network. Driven by massive reshoring trends and next-gen industrial innovation, optimized by AI workflows that build unshakable operational resilience, and locked down by proactive security against evolving freight fraud. Are you ready to navigate the shift? Join the industry's top minds to build the future. The FreightWaves Domestic Supply Chain Summit, streaming live June 17th. Register for free at live.freightwaves.com.
Welcome back. Now we are joined by Dennis Montz, President and Chief Operating Officer of PayCargo Labs. Excited to have you here. Thank you for taking the time.
Hey, thanks, Julie. Great to be here. Hello, Craig. Hope you guys are doing well.
Yeah, Dennis, thank you so much. This is our inaugural week. We always love our inaugural guests. We had an amazing guest and no different than yourself. Tell the audience about PayCargo Labs. What are you guys up to? What are you seeing? What do you do for customers?
Well, PayCargo is a two-sided payment network. We were founded about 20 years ago, specifically to eliminate payment delays that prevented cargo release. And the network has grown organically to over 150,000 logistics businesses globally. More than, we process billions annually. We have 65 100 or more vendors receiving payments across the network, and this is across ocean, air, rail,
When
trucking.
we're on the split boxes.
Go ahead. Sorry, Dennis. We sometimes
sorry.
forget we're live. So it's okay.
Anyway,
This
it's a March
is
two-sided
first
network.
week. We're just getting ready for it. So
I'm glad I can, help you break it in. Thank you.
it's all good. We appreciate our guest.
I mean, our main focus is simple. We're just trying to remove financial friction in the logistics intermodal supply chain, right? So, if goods and information and money can move together, then the freight's going to flow faster, and that's essentially where we sit.
You guys started out in air cargo, really focusing on the air cargo business was sort of your first break, and international import-export, right? Is that, am I mistaken on that?
That's correct, right. For anywhere where cargo was being held for purposes of a fee due and needed immediate release, we guarantee the funds movement immediately so that freight and cargo can be released as soon as the payment's made. Yeah, no delays.
And how much of the business is international versus domestic?
Well, I mean, it's almost all international in the fact that we're deep in the intermodal supply chain, right? So most of our movements are via air, which are inherently majority international, as well as ocean freight. Our customers are all the largest global forwarders, all the ocean carriers, marine terminal operators, every airline, et cetera. Yeah.
So we've had a theme sort of earlier today and now about connectivity and visibility. Tell us about how your tool allows fragmented systems to kind of come together and see through all of that.
Yeah, I think, there's a growing cost, fragmentation across the supply chain. I mean, every shipment involves stakeholders operating on different systems with different priorities. I think there are three root causes of the friction. The first would be operational intelligence, the fragmentation of that. So systems are not talking to each other. They're not interoperable. So you have carrier systems, you have marine terminal systems, you have rail systems, TMS platforms, ERP systems, and everyone has a version of the truth, but few have the same truth. And then the second piece would be capacity planning misalignment, because in the intermodal supply chain, as the freight is moving from one stakeholder to another, what optimizes one stakeholder might sub-optimize another operationally. An example might be in a marine terminal. You have a vessel discharge and there's a surge. There are appointment restrictions. There are rail cutoffs. There are warehousing receiving limits. What's good for the dray carrier entering a marine terminal in their capacity may not be what's good for the servicing capability of that marine terminal operator. So everyone's managing their slice, but nobody really manages the entire workflow. And then the last piece would be freight status events and visibility misalignment. So operational events and financial events aren't always synchronized. Container might be available, but it might be financially restricted. The last free day changes, and that might not be propagated between the marine terminal operator and the carrier. Perhaps they have different last free days on their storage terms. Exam status changes with customs and VACUS, storage accrual charges, contract conditions that might not be properly aligned to the specific movement, and contract conditions that might not match a shipment reality of what's happening. So what happens? People are emailing, they're phone calling, there's so much manual intervention disputes, and it increases dwell. So, essentially every container interchange or every air freight interchange creates potential for both freight flow friction and funds flow friction. And there's a need for systems to intermediate that and connect the dots between what's happening with the freight and what's happening with the information and what's happening with the payments.
Dennis, ultimately freight, beyond moving physical cargo, is moving data and moving money. And that's really, you play in two roles, the data and the money movement element. AI is a big piece of this. Is this really the impetus for the labs business specifically?
Well, the labs business is definitely working with AI. Essentially what we did, we set up PayCargo Labs to enable us to build applications that do two things. One, vertically integrate within our customers' complex accounts payable and accounts receivable and contract management processes to provide more applications in that vertical. And then horizontally, to move across the intermodal supply chain as the freight changes hands, anywhere that there's a need for cargo visibility, coupled with the need to hold or control or release freight for purposes of a fee due, we're building applications.
What is, in terms of customer, what they're experiencing, tariffs last year was call it an erratic year. This year we've had 2 Supreme Court decisions that have changed the way tariffs are being dealt with. This morning we got some news about potential trade tariff policy changes, some post-investigations. What are your customers saying about sort of the state of the tariffs and global trade?
Well, I think to the extent that it causes disruption, that's a problem, right? So, it's not just about cargo visibility of what's happening. The industry spent the last decade asking, where's my container? And you would hear it in every meeting I went to. I can track my Domino's pizza, but I don't know where my container is. Well, it's really more about, can my container actually move? So when there's tariff and supply chain disruption and there's congestion, then it's really not just about the visibility of that container. You know where it's sitting, but it's about execution, right? So, if you know all the information around your location, the last free days, the appointment availability, vessel ETAs, things like that are getting all disrupted, even if you have that information, you still need to very quickly get a hold and release of that freight if the payment's not reconciled. Because if doesn't happen, nothing moves. So for us, it's really about visibility of what's happening during this disruption, but also helping people understand how to take action so there can be more throughput.
So all of the data that's available and all of the visibility, creating an infrastructure that allows sort of the financial and the data portion to catch up with the physical infrastructure, what does that mean going forward? How does this benefit your users and make them supply chain winners?
Well, I think, the industry often blames congestion or labor shortage, chassis shortages, vessel bunching, capacity constraints. But increasingly, delays are not physical; they're financial and they're data. An example: a container arrives in LA. I heard you talking about Gene on the show earlier. Well, the vessel discharged, the container's available, the truck's ready, the appointment's available. Yet, if demurrage isn't paid or the payment's not verified, release is not transmitted, carrier and terminal systems are not synchronized, then the truck mission's going to fail. And the freight didn't stop because of a crane going down. It stopped because the money and information were out of sync. And that's what's really important, to keep everything in sync. A surprising amount of what we call operational congestion is actually financial and data congestion.
And Dennis, are you using American banking system to interact with the entire globe, or do you use different corresponding bank partnerships around the world?
Yeah, we have multiple payment rails around the globe. We're operational across Europe, in Oceania, Australia, Hong Kong, of course, all across North America and Central America, and currently we're expanding into India and some other areas.
So what's the number one thing that's in the mind of customers today for you guys?
For my customers, it's how can I have speed of funds flow that does not constrict my cargo flow, and so they want immediate payments, immediate funds flow. They want guarantee of that funds, but they also need a tie that there's accuracy in the invoicing relative to what happened in the freight movement. So the cargo visibility needs to match distinctively what's happening in the payment flow, because if it doesn't, the payment can't flow. And so much of the cargo is related to immediate release relative to payment assurity.
Has there been a big uplift and surge in customer activity since the tariff and the global trade and just this entire sort of chaos that has been the past couple of years?
Yeah, I mean, we see differences in types of, we process all types of logistics payments for freight, for storage, demurrage, chassis, truck, rail, you name it. But what we see is a little bit different in the mix, right? So when there's supply chain congestion, you'll see more storage charges. You'll see more charges at depots and intermediaries that take the slack out of the system when needed to move the freight or not necessarily have the freight flow in its normal manner, if I could say it that way.
That was great. Dennis, thank you so much for being with us today. Dennis Motz, President and Chief Operating Officer of PayCargo Labs. Coming up, we have Bill Stevens, editor of Trains Magazine, and we are going to get into the merger and some other data around what's happening with intermodal.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
Welcome back to FreightWaves Today. So excited to have you here. It has been an amazing inaugural week here on FreightWaves Today. We're so excited. We're learning so much about different parts of the ecosystem. Julie, I got to tell you, the thing that is, and I have been bullish, I increasingly get more bullish. Everybody we talk to is just talking about how bullish things are in the freight market.
Yeah, I think it's everything that we read shows that, right? I
The
even
data
looked
says
at
it.
What's interesting is that now I feel like demand is catching up. I think we've felt like it's all been capacity exit.
I didn't think that, by the way.
I thought it was capacity
Everyone
exit
has
and
been
demand has
saying
been
that.
weak.
Everyone has been saying that it is strictly a capacity crunch. I think that is a part of the story. The government regulatory crackdown is a real phenomenon. But, you know, one of the best ways to sort of understand the state of the market and state of the economy is to look at the rail data. And we have been monitoring the American Association of Railroad Data really for the last couple months. And, you know, a couple months ago, I wrote this article. It was over, I believe it might have been spring break. And I was shocked at looking at the volume year over year shipments on how strong it has been. And it really backed up this question about whether or not the economy this freight economy is really recovering or whether this is strictly a capacity situation. And I talked about this earlier on my morning video, is that the economy is actually pretty robust. And we're hearing it from every single guest. And these companies, you think about it, we've had J.B. Hunt, that's a large, very large intermodal and truckload player, talking about their constructive to the market. Shelley, I've known Shelley for many years. She is probably the most seasoned executive in running a very large transportation company, and is always very conservative. That's just the nature of J.B. Hunt. So she's always very careful to kind of get out ahead of the market. She's learned a time or two throughout her career not to do that. So I would say a couple steps more bullish than what you typically hear from J.B. Hunt. Although during their quarterly earnings call, they were incredibly bullish, and I think on the day she was bullish. Now, Webb Estes, really strong, but he doesn't have public investors to deal with. He says they don't have debt. They don't even deal with quarterly earnings. So good for him. Did you hear that number? Because that's pretty shocking that they went out and spent hundreds of millions of dollars and paid $5,000 for Yellow, and they bought a huge capital investment in Yellow's network.
Yeah, still debt-free, bought tons of infrastructure as they did it. Bought trailers for a steal, honestly.
Yeah.
So that was really cool to hear. Hey, I'm not the only one who thought it's only capacity side.
No, that was the general consensus.
Shipper rate report that just came out, and over 70% of the shippers felt like the tightening was due to lack of new entrants, less CDLs being
It is all of that, but you look
awarded.
at the ISM data, which we talked about today. You look at the LMI
the way
data.
it's shipping.
Everyone loves to quote Cass's shipment index, and Cass is a great partner of FreightWaves and an important data set. But what often is missed in that is that the Cass shipment data, the volume data, is the number of shipments. And on the front end of an industrial recovery, you're going to have more consolidation into truckload from LTL. So you have potentially more freight moving, just less freight bills.
Yeah.
And I think that's really what's driving it. And I like to look at the railroads because, first of all, who doesn't love trains?
It's pretty fun.
Trains are awesome. Trains are absolutely incredible. And speaking of trains, we have Bill Stevens, the editor of Trains magazine, the definitive news in trains. Bill, you're a legend in the railroad industry. We brought you on a couple of months ago as our editor of Trains magazine and trains.com, and people have been so complimentary about the work that you do. What is the state of rail today?
Well, thanks for the great intro, Craig, and congrats on the launch of the show this week. I think the big news this week in terms of rail traffic is that the acceleration in volume continues. The AAR traffic figures are just out today. And overall traffic was up about 7% in the U.S. compared to 5% in the last 4 weeks and 2.5% year to date. And like I said, that shows an acceleration in volume. Intermodal, which is tied primarily to the consumer and makes up about half of all rail traffic, that was up 10% last week versus 7% in the prior 4 weeks and about 2% for the year to date. On the carload side of the business, 7 of the 10 carload commodities were up. This helped carload grow 4% for the week, which was above the 3% rate for the prior 4 weeks and roughly in line with the 3% for the year to date. The big movers were grain, up 34%. That's a tariff-related story that goes back to the beginning of the year. Forest products were actually showing signs of life. They were up 8% for the week, 3% for the prior 4 weeks, and year to date, they're still underwater at down 1.2%. Metallic ores and metals up 20% versus 11% for the last 4 weeks and 5% for the year to date. So another acceleration there. And included in this total are things like iron ore, coke, and iron and steel scrap, which are the ingredients to make steel, both for the integrated mills and the mini mills, the electric arc furnace mills that make about 2/3 of the U.S. steel today. So this does show, I think, signs of an improving goods and freight market, because so much of what the railroads haul on the carload side is raw materials that go into the stuff that you and I buy, or that construction firms use, data centers, you name it. So that's the lay of the land right now. The only thing that was down was non-metallic minerals. down 2.4%, led by a decline in crushed stone, sand, and gravel. That's not a good sign for construction because that's one of the primary ingredients.
But housing has
that just could be a blip.
Housing's been somewhat challenging, Julie.
And how does that? Absolutely, we've seen that
housing has been a big dog,
lagging the most. But what does that mean with that being down, but forest being up? What is that being used for?
Well, I mean, Bill, you have any thoughts on forest products up? I mean, it's been pretty. Forest products have been down for some time, but I think a little bit of a recovery. Would you just think this is sort of situational?
It could just be a blip in the data for this week. We'll just have to wait and see. It's certainly not a trend. It's way too early to call that. And on all the investor calls that the railroads have done recently, as well as in their first quarter earnings calls, nobody said forest products was going to be up. Everybody said that's going to be a drag.
No, that's been a
surprise,
tough.
yeah.
I mean, a lot of lumber mills have shut down. We print paper, and paper
secular decline.
A more challenging market. People aren't reading paper. Please go read paper. Please subscribe to magazines. The paper industry needs you. The railroads need you. Bill, this is fantastic. It's always my favorite day. Wednesdays is when we get the American Association of Railroads. And I always say that the railroads, despite Bernie Sanders' best efforts, people are not getting trains to their homes unless you are a modeler. So trucks are still the lifeblood. But if you want to understand the industrials, that's all railroad data. And that's why it's a really important barometer, because it does. The bulk commodities that move on rail, we're talking about this early, Julie, everyone sort of has argued, or large people argued, that this capacity constraint, this issue in trucking is really a capacity constraint, regulatory compliance. But the thing about the rail commodity data that you just revealed, those are not typically fungible traffic to trucks. That's a lot, except for intermodal. That is a lot of raw goods going into production. And that's why I think it's the most important report of the week.
Yeah, I love it as well.
So, Bill, I want to talk about the biggest story in railroads in perhaps decades.
Yeah.
Is this idea, until the last merger, the Kansas City bake-off. I want to talk about the transcontinental UP Norfolk Southern potential merger. What is the state of play right there?
Well, it was a big development last week. When the Surface Transportation Board, which is the federal regulator that handles rail mergers and economic regulation of railroads to the extent that that still exists, they accepted the Union Pacific and Norfolk Southern revised merger application. And if you haven't been following this, the initial application was filed in December. A month later, the STB rejected it as incomplete for basically three reasons. It didn't have enough data on post-merger potential market share, didn't include the full merger agreement, and it also didn't properly handle control of a terminal railroad in St. Louis that's owned by most of the Class 1 railroads. So they said, well, you can go submit another application, do it by April 30th, which the railroads did. And they accepted the application, but they paused review of the merger and the environmental review until further notice. They said that narrowly the application met the board's standards, but it really didn't contain enough information in 9 different areas for the board and other stakeholders to fully review the merger. So they ordered UP and NS to provide more detail by July 27th. It'll take a subsequent order of the board to restart the merger review process. And this likely pushes the final decision on the merger into the second half of 2027. There was something in this decision for everyone. Union Pacific and Norfolk Southern said, hey, this is a great milestone. We've got our merger application in and accepted. Let's go straight to review. The other Class 1 railroads, as well as some shipper trade associations who opposed the merger, said, this is what we were telling you all along, that the application was deficient. It didn't go far enough to explain market share, the effect on competition, and this decision just shows all the gaps in the application. Wall Street didn't like it. UP and NS stock both fell on the news. And that is where we're at right now. So we are waiting to see what UP and NS come up with in the next 60 days or so.
Bill, what's your read of in terms of sentiment? I've seen some noise, some articles, I believe, that you have written about the fact that UP may pull their application. I believe there was something to the effect if they had to offload some of their infrastructure that they may not continue. And maybe I misread that. Has there been any conversations about that?
No. So where that came from is when they submitted their revised application, it included their full merger agreement with Norfolk Southern. And included in that were concessions that they would be willing to accept and what they wouldn't be able to accept. They would be willing to accept conditions up to $750 million. How they measure that is up to question, but and open to debate. That would trigger a review at UP and said, well, wait a minute, are we still going to have, does this still make financial sense to do this deal? But one thing that was an absolute deal breaker is if the regulators ordered widespread line divestitures or widespread trackage rights that would give other railroads the right to operate over Union Pacific's tracks to reach customers. And the lone exception to that would be some parallel lines that they own between St. Louis and Kansas City. But that would be the only thing that would really cause them to back out of the deal. And what was the second part of your question there, Greg?
Well, I'm curious sort of the state of play. I mean, the Trump administration has come out. Donald Trump, I believe, had met with the Union Pacific CEO, and I would call it, I don't know if the endorsement's the correct term, but it seems like he was excited about the deal. At least that's what the report said. Who knows with this Trump administration where they actually sit on things? They're always in negotiation, it feels like, so it's hard to predict. But do you have a sense for what the market is expecting on this deal? Do we expect it to go forward? Do we expect it to happen? Do we expect it to be approved? Or is there going to be so much public opposition that the chances of it happen is quite small?
It's interesting that everybody loves betting on things and placing odds on things. And here we have the first merger reviewed under the new merger rules. And I say new, they were adopted in 2001, that are untested. They have a far higher hurdle than the old merger rules did. And so I don't see how you can predict it. What it's going to come down to is one thing and one thing only. And that is, does this merger enhance competition? That was inserted in the 2001 merger review rules after the messy combinations of Class 1 railroads in the late 1990s. And the old rule said you just had to preserve competition. The new ones say you have to enhance it. In the context of the time, they were talking about rail-to-rail competition. If you read the rule, it doesn't say that. It just says the merger must enhance competition. Union Pacific's argument is that, hey, this is a different time. Rail volumes have been stagnant since 2014, and the truck is the real competitor here. This merger will enhance competition with truck by eliminating interchanges, having faster transit times, and more reliable service. The other railroads don't see it that way. They say that this merger would create a Goliath that would be hard to compete with and would actually reduce shippers' options, which is the opposite, obviously, of enhancing competition. So this could come down to how the STB decides to look at and define enhanced competition. Is it just rail versus rail? Is it rail versus truck? Or could it be a third way, which is rail and truck? We don't know.
So, Bill, that's clearly one of the sticking points. You mentioned that there were 9 areas that they asked for further information on. Can you speak a little bit to what some of the others were?
Yeah, they asked about for more data about enhanced competition, how shippers who currently are served by both railroads, and there's less than 10 of those, would be served by 2 railroads. So basically, who's going to serve them so that they still have those options. They asked for more data on market share and how they would handle some passenger operations. And competition generally. So it'll be interesting to see what Union Pacific and Norfolk Southern come up with. This application was over 7,000 pages. The first one was slightly under 7,000 pages. So there's a lot of data there, but the merger critics, merger opponents say there's still not enough.
There's a lot of legal fees probably paid to prepare those documents. You can only imagine the size of that bill, no pun intended. Bill,
Yes.
I think it's fair to say that intermodal and trucking have all, really that's the intersection of where competition takes place. And as we've seen from companies like we had STG was in here yesterday, the CEO, the old Pacer business, JB Hunt, very successful, again, another one of our guests that has a very successful intermodal operation. Hub Group's got a set of challenges right now, but intermodal has always been, we call it interchangeable truck, but also that is a fungible mode of traffic. It seems like that's the strongest argument. We're talking taking 2 million truckloads off of the roads, which seems like a big number. I actually did the math. It's the equivalent of what Knight-Swift does over the course of a period. It's a very small, infinite number. But intermodal, even though it's so important to the railroads, particularly as coal continues to be less important, it's still a fraction of the total trucking freight move. There seems like a lot of opportunity for growth in intermodal. Seems like the strongest argument that UP and NS have is that they can provide transcontinental cheaper, faster than trucking companies can.
That would be a prime argument, though. But if railroads really want to grow intermodal, they've got to put some meat on the bones of their skeletal intermodal networks right now. Right now, the focus is on doing what railroads do best, which is hauling large volumes, long distances between these major terminals and one at the other end. But as you know, Craig, that's not necessarily the way freight moves. It moves shorter hauls in widely dispersed areas. And so the railroads will eventually have to figure out how to serve those markets.
The biggest opposers or opposition, the chemical shippers, have pushed back aggressively because, again, a lot of that freight can't move or doesn't move by truck traditionally. The bulk shippers seem to have the strongest, rightfully so, perhaps, aversion to this merger. What's your thoughts on how much political power do they have in Washington to really potentially stunt this opportunity?
Well, I think two things there. One is the STB is an independent agency, and their chairman has said that they're going to look at this on the facts and based on the data. The most recent chairman, Marty Oberman, who retired a couple of years ago, he says this board will only look at the facts and the data and come up with a conclusion. That said, you can be sure that the American Chemistry Council and other shipper groups who are really dependent on rail and the rail supply chain will be putting pressure on people in Congress and presumably the White House as well to try to put the brakes on this merger.
So, Bill, as this potentially passes, who wins and who loses? We talked chemical maybe is a loser. Who wins in this situation, other than obviously the railroads and potentially those who need to ship?
The railroads the winners are
the two railroads.
Yes, correct. Yeah, I don't think BN doesn't believe they're winning.
No.
It'll be interesting to see. One of the main arguments that UP and NS are putting forward is that shippers want single line rail service. They prefer it, and that the proof is in the pudding that rail market share is significantly higher when there's single line service versus interline service. There's too much friction, unreliability, and delays built into an interline move. The other railroads say, well, you can do all sorts of things short of merger with interline agreements to improve service, make it more reliable, and make it seem more like a single line move. But what UP and their consultants came up with is that single line moves tend to be about 35% cheaper than interline moves. So, despite fears of rate increases, there's the potential for some shippers to see rate benefits out of this. And Kenny Rocker, Union Pacific's chief marketing officer, this week came out with a pretty pointed letter saying, hey, this whole merger is geared toward competing with trucks. And if we're going to compete with trucks, we need to compete on price. And he was basically saying, we have to be competitive or we're not going to win your business.
Yeah, I think autonomous trucks are certainly on the horizon at some point. We've talked about that a lot. That is going to be important for the railroads to have faster transit. Nobody likes their freight getting stuck in Chicago. The second greatest freight city, Chattanooga being number one. I do have a question for you, Bill. I got to ask about passenger railroad because there's been a lot of noise, a lot of news out there. Brightline, arguably up until recently, felt like the most successful case of private car transportation. Is this just a bad omen for privately funded rail transportation in the United States?
You know, I had thought the same thing. I thought Brightline was going to be this poster child for, can we see a profitable passenger service that is just run by the private sector? And right now it has huge debt problems. There are questions about whether it will be a growing concern for their routes in Florida, which connect Miami with Orlando. That said, their ridership and revenue are really growing rapidly. So this may be more a structural issue at this point, but a lot of people who I've spoken with don't believe that Brightline can succeed the way it's currently structured. And then Brightline West is a whole nother question about their high-speed line that they want to build between the Los Angeles area and Las Vegas.
It goes to show you should not paint your transportation assets yellow. Spirit did not survive yellow, which is kind of orange. Not a good sign for transportation companies. Bill, got to have you back. Every single week, the American Association of Railroads on Wednesday puts out the rail tonnage report. It's a very important report. It's my favorite day of the week. Thank you, American Association of Railroads. Bill, appreciate your time. Lots going on. Railroads have never been cooler nor more exciting. Maybe in the Gilded Age, but this is the second one. Appreciate it, Bill. Take care.
Thanks, you as well.
Thanks, Bill. All right, we are going to take a quick break. We'll be right back.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
The map is changing. As global uncertainties rise, the future of the supply chain is moving closer to home. Welcome to the new coast-to-coast North American network, driven by massive reshoring trends and next-gen industrial innovation, optimized by AI workflows that build unshakable operational resilience, and locked down by proactive security against evolving freight fraud. Are you ready to navigate the shift? Join the industry's top minds to build the future. The FreightWaves Domestic Supply Chain Summit, streaming live June 17th. Register for free at live.freightwaves.com.
Welcome back to FreightWaves Today. I love having Bill Stevens on.
Me too.
the
I could have asked 10 more questions.
Trains are such a cool business. It reminds me, I just think trains are so romantic, tied to the American West. If you are interested, Trains Magazine Bill is all over this. He's the editor of this. I also wrote a book that actually covers, and I couldn't have learned more about the trains. Moving the World, you can get it on Amazon. I got to tell you, I love the trains, but probably the hottest sector since the build out of the railroads is AI. Harish, they often compare the amount of capital that's gone into AI as sort of the modern expansion of the great railroads. So it's fitting to bring you in. You're a part of AI. Augment is all over the AI story. How are you doing, Harish?
I'm great. Thanks for having me, Craig and Julie.
Really excited to have you. You're a storied founder. I mean, you have built a very successful business that you sold. Tell us a little bit about your history and what you're seeing right now in the startup world and around AI.
Sure. I'm a technologist or an engineer. Stumbled upon the world of supply chain logistics, starting from Amazon back in the day when Amazon just sold books, and got the fortune to build a lot of software there that runs supply chain and logistics, and really fell in love with this industry. It's an industry that kicks you in the butt really fast. It's very humbling for software engineers, but it also is like a never-ending problem that you can get into it. And I've built several businesses all applying tech in supply chain logistics. And now we're building Augment, which is like AI for supply chain logistics. Yeah.
And you had you're commonly referenced as building out the on-demand business that Shopify bought, that I believe then Flexport purchased it to deliver. And now you're on to an AI startup. I don't think anything's hotter than AI right now. But companies are struggling to figure out how to implement it. And I think supply chain businesses specifically, what is the number one reason that we haven't seen AI adoption across the logistics landscape?
Yeah, I think supply chain and logistics is an industry that is inherently multiplayer, right? Like multiple businesses have to coordinate, and the coordination tax is very heavy, right? Like, trucking intimately. To move a truck from point A to point B, I think at least 6 different companies have to stay coordinated between a shipper, a broker, a carrier, a pickup warehouse, a drop-off warehouse, and maybe a factoring company for that truck to be moving from point A to point B. And that means that, the implementations have to account for all of this coordination that needs to happen. And some of those could be on emails, and some of those could be on phone calls. And so where you see a tremendous amount of buzz and success in AI today is in, I would say, single player sports, right? Software programming, legal, healthcare, where it's a doctor and engineer, who are you're making them a lot more productive with these incredible AI tools. Supply chain logistics is inherently multiplayer sports. So it takes a little bit longer because you can only move as fast as, I would say, the slowest link in this. And I think where the companies underestimate is the change management, right? Like what it takes to deploy a technology in an incredibly complex environment. If you take a brokerage, literally they might have different processes running by customer type. If you're running loads for Home Depot, or you're running loads for Lowe's or Target, there are very different ways of running those. And you have to get that, tribal knowledge out, and you have to implement that in your AI systems and processes. And that takes a fair bit of time and energy to do that. So, it's I would say it's not as much as the tech. It's a fair bit of change management that is needed to get these AI implementations to start delivering real value.
So these sound like very highly customized, they're agents, I assume you're using, that are highly customized to manage these processes and create operational efficiencies. Can you give us some examples of some of the best use cases and some of the best outcomes that you've seen?
Yeah, I think the first one, which is very topical right now, is capacity sourcing. capacity is getting tightened by the day, and Craig posts about it, and I look forward to his posts all the time around it. And so if you're a brokerage and you're trying to find capacity for the loads, traditionally you would post on a public load board like a DAT or truck stop, and there would be a fair bit of incoming calls or incoming emails. And typically, most of those calls or emails would get missed because you just didn't have enough human capacity to answer every call or email. And now you can put an AI agent in front of it that can start to take those calls, answer to those emails, verify if the carrier meets all the requirements, safety, compliance, fraud, and equipment wise, and then ultimately, either go all the way to negotiate or pass it to a carrier sales rep. So that's sort of very typical use case of capacity sourcing on the inbound. I think where we're seeing a tremendous, more lift is outbound now, because the capacity is tightened so much that the number of inbound calls are not as much as it used to be 3 or 4 months ago. And so a lot more people are now have to rely on outbound calling, outbound emailing, really building these lanes up for themselves. But that's a fairly manual effort if you were to call a fair bit of carriers and start to build. So how can you get AI assistance? That's a pretty big use case that is also very topical today. Another big use case is very simply like tracking shipments, or like before you book, I'm making sure that there's carrier safety requirements as per the new SCOTUS ruling. Then you are pre-dispatch and then all the way in transit and at delivery, you're tracking the loads. But you're not just tracking the loads, you're tracking the loads per the requirements of the shipper. And so if you are running urgent load for a large shipper, the tracking requirements are quite different than if you're running a non-urgent load. And having your agents understand those requirements and then adapt to your tracking of a shipment end to end to meet the shipper requirements. So these are some of the few examples in real credible implementations and ROI.
Harish, it feels like with SCOTUS, the Montgomery decision that you just mentioned, the cost has gone up for brokers, and yet the risks have also gone up, perhaps exponentially compared to where they were 3 weeks ago, it feels like. Same thing for shippers. I mean, shippers certainly have new risks that they are going to have to contend with. There are going to be plaintiffs' attorneys that try to expose them in the same way that the Supreme Court has ruled that brokers can have exposure. That just increased costs for processing, costs for underwriting. If we didn't have AI, I imagine the exponential cost would really put a lot of brokerage margins at a substantial risk and potentially make it where that business is unprofitable. Is that the way you see the world?
Yeah, I mean, I see this like, tale of two curves here, right, Craig? Like one is there is a structural tightening of capacity that has been happening, whether it's compliance on commercial driver licenses, whether it's, this upcoming ruling on Delilah Law, and some of it is already sort of put in motion in terms of compliance, and there's a structural sort of tightening of capacity that's happening. I think on top of that, the SCOTUS ruling, which, takes away these shields from brokers, like they could be held liable for negligent assignment to a carrier, it certainly increases insurance risk, certainly increases compliance cost on the broker side. So that's sort of this one side of the curve where, the market, which has been, I would argue, in a price recession for the last 3.5 years, have really turned around. Capacity is tightened, the prices are going up, and in some ways is a bit inflationary. And then there is forces like AI that are, I would argue, a bit deflationary, right? They're making it easier to do work. They're making it easier to comb through things or documents that would have taken humans a long more time. And I think net, I feel like we are still going to stay in an inflationary environment. Like AI is not there where it's going to make up for this extremely tightening of capacity and increasing of rates. But it will help a little bit for the brokers who are opting in, leaning in with this. And then two is the existential aspect of it, right? Like there is an aspect of day-to-day business and the cost of running your insurance going up, your compliance costs going up. But then there's an existential threat, which is like, hey, God forbid if there was an incident and you were liable, or at least were put into the court, on an accident, and you have to go defend. And sometimes, the rulings, as you guys have seen in the past, have been so enormous against, against the carriers. And if brokers are looped into it, it could be an existential threat to the business itself. And you have to start to protect that, which means that you have to do everything possible today so you never get to it, which for many of the brokers requires almost new functions or new processes that they have to institute. So they are minimizing the risk of existential threat to near zero.
And it strikes me that ultimately, when you're dealing with risk itself, a lot of it's human mistakes, human oversight. Humans get tired. We make mistakes. I make mistakes every day. And plaintiffs' attorneys are looking for just one reason to basically demonstrate that you were negligent. And that's really what they're doing. And they can exploit that. Whereas AI, assuming it's properly managed and trained, does mitigate some of those risks compared to sort of human error.
Humans make the decisions to override the procces set in
Well,
place
I
in
think
the
we heard
situation
that.
too that creates a lot of that risk.
We
right?
heard that. I think highway, the number was something like, the 40% of
the flags
got overridden by humans because they thought they were false. In a world where every plaintiff's attorney is going in and shopping for a reason to sue you and hold you accountable, that becomes a pretty scary environment. Harish, speaking of like humans making mistakes, AI is credited with hallucinating. How do you manage to keep it honest?
Yeah, first you have to invest a significant amount of energy in guardrails. So we know AI is non-deterministic, right? Like code is deterministic. If you ask code to do the same thing 1,000 times, it will do the same thing 1,000 times. AI, if you ask the same thing 1,000 times, there's a chance 2 out of the 1,000, it does not. In worst case, it might even lie or hallucinate, or might just give you a different answer. And so, in processes like this, where you need 100% determinism, I think you have to take AI input and you have to put coding guardrails on top of it, which means that you're actually writing some real software code on top of AI. Now, AI is getting you to 98%, but the things like, hey, I never want to book with a carrier, a score of, is in the critical range, or their insurance is below a certain, threshold for me. I think those type of very critical decisions, we have to write code on top of AI to make sure they're 100% deterministic. Now, the first set of pieces on like, hey, get me information on the carriers, get me their FMCSA scores, get me their safety scores. Let's see what the sort of highway scores are, compiling all that, analyzing all that. I think AI has an incredible power of it, but I don't think it's there yet where you can let AI make the decision without adding the guardrails.
Yeah, I think that that's incredibly important, having some sort of moat there, right? So I spoke a few weeks ago at an event full of manufacturers and asked them how many of them were using AI, and I was really shocked at how few raised their hands. So for those that are just looking to get started, where do you suggest they start? What do they do first to try to create efficiencies?
I think the most important thing is to not treat AI as a panacea for everything, or make it this very big thing and saying like, I'm going to spread AI magic dust all over my company and everything will be better, because it takes a significant amount of effort to get the ROI, to implement this thing, to change manage it. So my number one thing where we've seen success is pick a single use case. Pick something that is so unglamorous that everybody in the company hates doing. It could be collecting documents, extracting information from documents, entering those documents. It could be, analyzing RFPs, or it could be analyzing performances of carriers. Pick something which is unglamorous, build a simple use case for it, and then engage with either build or buy or pick a vendor, and start to say like, can I deliver this one use case? And what we have seen is that if you do that, then you start to earn the trust from folks in the company that this is here to help. It's not just guys from Silicon Valley saying something that is sounds cool but doesn't add or make my day any different. And then once you have the trust of the floor, then you can start to launch the next use case and the next use case. And so we highly recommend, even with companies that we work with at Augment, we say like, I know you've got 10 ideas. Let's narrow it down to one to start with. And let's show your floor, let's show everybody in the operations that this can truly help.
I love that. Start small and then expand bit by bit.
Harish, I was with Doug Wagner. I think he's a mutual friend of ours. Last night, we were talking about AI. They have Augment, have implemented Augment inside their organization at Echo. But we also talked about what happened the last upcycle during COVID. Is this massive movement to offshore, to bring in offshore talent. It feels like with AI, a lot of the work that offshore groups were doing could be done by some of these automated workflows. But you got to get started, you got to implement it. What does the toolkit look like when you're taking on a new client so that they can take advantage of your technology in this massively competitive environment, tight market? I mean, if you're dealing with trying to find capacity, you don't have a lot of time to deal with putting on AI agents. So what do they do about it?
Yeah, I think the best way to think about this is like, if you think about your business, like if you're a brokerage business, like you have, you're basically in the business of matching demand and supply, and then there is a tremendous amount of coordination tax you have to pay to do this work. And the coordination tax can be in the form of, tracking shipments, verifying documents, collecting documents, making sure payments are going through, making sure appointments are getting scheduled. So rank sort these and start to implement them one at a time. The beauty about AI is that flexing in and out is very easy. It's like buying more tokens and buying less tokens. It's not as cumbersome as flexing, human capacity. So you can truly get started with saying, okay, maybe I start to use AI for capacity sourcing. If I need more of it, you can truly flex it overnight. And that's the beauty of these technologies is that, and if you think about like the freight industry being so cyclical, and yes, we're going to go through this, but I don't think we will ever escape cyclicality. It's the nature of this industry. And in every cycle, I think people overhire and then they have to like let go of people and then overhire and then let go of people. Both painful, also hurts economics. And as a result, some of the multiples for these businesses are low because of cyclicality. I think AI is a tool where you can actually work with the cyclicality without having to go overhire or underhire in these boom and bust cycles, and have much more predictability in your financials, right? Which then will be trusted a lot more by the financial markets as well in terms of awarding multiples and whatnot.
Harish, this AI conversation is not going anywhere anytime soon, not only in freight and logistics, but across the country. We've got an AI summit. The audience should sign up for that. That is in July. It's in Chicago. There's not a better place. Second best freight city. Chattanooga will be number one. We're going to bring together the thought leaders across logistics to talk about AI. You're going to be there helping folks figure out how to manage their AI implementation. And for those that haven't gotten started, there's no time like, what did they say? The best time to start was yesterday. The second best time is today. It is a great time to get started. Everyone's early. The problem is, Harish, you're on X. I'm on X. We live in media. We think everything's behind. The reality is everyone's just figuring it out.
It is, yeah. I mean, listen, there will be like, in the short term, there will be two types of companies, supply chain companies that adopt AI and the ones who don't. And in the long term, there will only be one type of company, supply chain companies that adopt.
Well,
and I think
I imagine the world is going to continue to move towards AI, whether we like it or not. A little scary, but also really cool. I couldn't be more bullish on the world of AI, what it means for businesses across just the world, and I think the great benefits and what we're seeing just in so many different applications. Logistics is just one of many, many applications. Supply chain. Harish, really excited to see you. Come to our AI Summit in Chicago. We'll be there. You should be there. Everyone should sign up. Sign up today. It's going to be amazing. Harish, thank you so much.
Thank you for having me.
And when we come back, we're going to talk about tomorrow, and we're going to recap today's show and talk about how awesome freight is in supply chain and things are rocking. Julie, real excited.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
The map is changing. As global uncertainties rise, the future of the supply chain is moving closer to home. Welcome to the new coast-to-coast North American network. Driven by massive reshoring trends and next-gen industrial innovation, optimized by AI workflows that build unshakable operational resilience, and locked down by proactive security against evolving freight fraud. Are you ready to navigate the shift? Join the industry's top minds to build the future. The FreightWaves Domestic Supply Chain Summit, streaming live June 17th. Register for free at live.freightwaves.com.
Julie, lots happening. I do think of like the AI build out. There was this great chart that actually showed the amount of capital, the percent of the stock market that's gone into AI build out versus railroad. Because everyone's like, this is the biggest capital investment. And it is. By the way, crazy stats. We spent $700 billion building out the interstate highway system. That's approximately $18 billion a year over 35 years. They're doing that every 2 weeks in terms of building out data centers. Absolutely insane in terms of the amount of capital. And of course, Harish is talking about AI. I just think we're all getting just started.
I think we are getting started. I think you said it really well that to us, we can't imagine not using it sort of in our daily workflows, but there are so many people who aren't yet using it at all. Like
It's
I
always
said, I was
cool.
so surprised. So
Do you remember when you were younger and your grandparents had an email address the first time?
I don't know that my grandparents ever had an email address. if I'm being
My
honest.
grandmother, gosh, it was 20 years ago when she was still alive. I remember the first time I went over to her house and set up, I think it was an AOL account, and she got on, and then she started emailing.
Oh,
it's
maybe
kind of
my
like that.
grandmother did,
It's
yeah.
kind of cute, and then you have your parents on Facebook, and then when your parents are on Facebook, like, this is no longer cool. AI feels like we're in those days. I remember just all of a sudden when people start to discover what it means, and I think one of the hardest things about this is people went back a couple of years ago and we're looking at AI and they're like, man, it wasn't very good. They used ChatGPT 3-4 years ago. But what we're seeing around AI, Claude is pretty amazing. Just the multitude of use cases that can be used, it does feel like it's a new frontier.
I think there's a little bit more to it. I think, especially in our industry, we are so programmed to be risk adverse, right? Whether you are at a shipper and it's your job to make sure you're compliant, or you're at a broker and you're following compliance, and people see AI as a risk. So I wrote a blog about it and put it on GoSonar.com about not adopting AI being the risk and how that really is going to make a huge difference.
Do you think that
sort of
the
like
brokers,
Harish said.
Because the brokers feel like riverboat
I think they're the least risk adverse.
These guys are.
So I think
guys
that maybe
and
that speaks
girls.
more to manufacturing and to
Correct.
shippers.
The shippers.
Less to brokers, who are, I'm sure, implementing it significantly more than the other,
Your
facets of this
comment
industry.
about manufacturers adopting AI or being slow to adopt AI, I think is the risk, is risk aversion, if you will. Brokers are riverboat
You're
gamblers.
not brokers.
Like they're
not risk
riverboat
adverse.
gamblers. You guys are freight bros or trading the floor. They would have been on the Chicago Board of Trade if they weren't selling freight or booking freight. And for those that are booking freight, we love you. You're welcome to the show every day. We have a fantastic show tomorrow.
We do.
Who's going to be on?
We have, you have my notes.
I do. We have
You have my
Ed
notes.
Esposito, the COO of Logistics. He'll be on talking about the freight market, what he is seeing. And we have Mike Koff, the Director of Distribution, Transportation Inventory for Opella,
Yeah,
one
it's
of
gonna
the
be a great show.
largest consumer healthcare companies in the world.
And we'll miss you tomorrow, but I'll be joined by Malcolm Harris, so it'll be a great show.
It's going to be amazing. And there's so much to talk about in freight. There's a story that I recommend everybody come in and check out, which is the story on the ghost fleets. It's on FreightWaves.com, and the whole concept is the idea that there's this sort of unregulated part of trucking. The drivers don't have to have the ELD devices. We talked about how I'm sure that the farm and agriculture truckers are super excited, but they're kind of out there. Rob Carpenter wrote it, and it sort of goes back to Gord's interview on the Tucker Carlson show about really what's happening in trucking. I mean, the compliance elements and compliance crackdowns are real.
Yeah, I think that there were parts of both of that, and like, yes, this golden age of trucking versus it being highly regulated at this point, and drivers being watched. Okay, it's not highly regulated by the government by any means. We're looking into that, but by like large carriers, for example, it is, where they're tracking and telling drivers where to make fuel stops and have in-cab devices and all of those sorts of things.
For true.
Versus, and even he talked about like automated trucks, and we're past the golden age, and that lowers the barrier to entry. And I don't know that I buy into that.
What, automated trucks or what?
Not necessarily a good thing for seasoned drivers, and that it was done to lower the barrier of entry into the driving profession.
Well, automated trucks, but I do think with the compliance, this deregulation environment to bring new drivers into the industry was an effort to lower the cost and make it easier to find drivers. And
no, I'm totally for that part. I think that it is still skilled labor.
It is.
But I do believe there can be significantly more regulation from a public safety standpoint.
Oh, absolutely. But I think it's more of enforcement. If you look at a lot of the stuff that's happened, that the regulatory, if you look at the executive orders and the DOT's efforts, and the FMCSA's effort, we had Derek Barzin a few weeks ago, a lot of it is just enforcing the rules that are on the books.
That's exactly right.
And realizing that some of the efforts to lower the barriers of entry are actually having profound impacts on safety, security, and economics. And I said this yesterday, and I'll say it again. Follow the money. The money will tell you where this is all headed. Republican, Democratic, Libertarian, Socialist. We're going to have regulation. It's coming.
Hey, what a good segue into follow the money. So the second half of our show tomorrow is going to be Freightonomics with Zach Rogers and our own Zach Strickland.
Watch that tomorrow.
All right.
Thank you so much.
Thank you, guys.
Appreciate you guys coming in every day at noon to 2. FreightWaves Today will be here. We're on Road Dog at 5 p.m. Check it out as you drive home or driving on the roads. And you can watch the live stream every morning at 6 a.m. and 8 a.m. Well, it's taped but it was live. You watch the stream at 6 a.m. or 8 a.m. every day on FreightWaves from the day before. So tune in when you're waking up in the morning, you miss a conversation or an interview, just go check that out.
See you tomorrow.